Friday, August 8th. Big day, exhausting day. There's so much moving around the chessboard that it's hard to make sense of it, although the copy near this video touches most of those bases. The important piece of the puzzle that is not in depth in the copy nearby is what's the relative importance of events overseas with domestic events? And although the United States economy is more subject to events overseas than it used to be, the real show is still right here. The ECB, Mr. Draghi, actually mentioned this week that the ECB would depart from the policies of the Federal Reserve, meaning he's going to stay easy or get easier while the Federal Reserve begins to at least remove some of its stimulus. And the meaning of this is very odd. Economies in distress, bond yields fall, especially sovereign yields, United States treasuries, German bonds. Overnight last night, the yield on German 10-year bonds fell to 1.04. At one point last night, the yield on German 2-year bonds went below zero, which means that I will pay you for 2 burgers today for the right to be sure to have 1 tomorrow. Here in the US, our rates are much higher, and the Fed is confronted with an economy that may accelerate. Will all this trouble overseas, all this Ukraine, Gaza, Iraq, all this stuff, and a Europe re-entering recession, which it did this week, which is also responsible for yields falling, will all that stuff prevent the Fed from tightening if it thinks it needs to? No way. I mentioned in passing 2 periods when the Fed allowed other events, external events, to talk it into staying easier longer than was prudent. One was in 1998 when the Asian contagion among Asian currencies looked as though it was going to drive the whole world into recession. The Fed eased in response. And what it got was an overheated economy and a deflation problem, which led to a recession. Again, 2004 to 2006, the Fed tightening gradually. In retrospect, the Fed needed to tighten much faster than it did because it waited, left gasoline-soaked kindling around that helped to create the credit bubble. This isn't a prescription for fast tightening. It's just that if the economy follows Janet Yellen's prescription and begins to accelerate, if prices begin to rise, wages begin to rise, the Fed will act no matter what the hell is going on overseas. And on that thought, have a good week.